What's going on, everybody? I hope you guys are all having a great day. A lot of information to get into today. Some of the major points are essentially seeing a lot of narratives about kind of moving backwards as far as innovation, or even being paralyzed in the United States as far as innovation and digital assets are concerned. Stumbled across a very interesting interview with the former CFTC chairman that I think was just released a couple of days ago, but the interview actually occurred in late July. I'm just going to hop right into it. We've got Blackrock, Ethereum merged into proof of stake, et cetera, et cetera. So to start with, Bitcoin's still in this bear flag, obviously, and broke above today, but now I know a lot of people don't believe in TA on here, but we're being held right still within this bear flag, even though we obviously, you can see where we wicked up to, probably right around close to 25K per Bitcoin. For me personally, like I've said multiple times, I'm kind of waiting to see how this shakes out. I haven't made a ton of moves over the past handful of weeks. It'll be interesting to watch, certainly. All right, so this came out. This is a letter to the acting comptroller of the currency. And it's essentially about, some of the initiatives that Brian Brooks was taking while he was at the office, while he was the head of the OCC. Now, if you're not aware, the Office of the Comptroller of the Currency is essentially, it's like the head banking regulator for the banks, basically, in the United States. And essentially what's being stated here is the interpretive letters issued by Brian Brooks in his tenure in office essentially granted banks unfettered opportunity to engage in certain crypto activities and remain problematic. Under your watch, the OCC, or Office of the Comptroller of the Currency, issued updated guidance with the aim of reining in potential risks posed by Brian Brooks' policies. Yet, despite these efforts, we are concerned that the OCC has failed to properly address the shortcomings of the preceding interpretive letters and the risks associated with crypto-related banking activities, which have grown more severe in recent months. We've also got the SEC/CFTC proposed amendments to this form that deals in hedge funds that also may reach out and touch digital assets. The focus of this is this Brookings Institution Future of Crypto Regulation document that came out that directly mentions Ripple and XRP. So if you understand who is being interviewed here, it's former Commissioner Mark Wetchin, who I believe is now at FTX, the exchange. So, and this is kind of how this is how the narrative is being spread, and this is kind of just how paralyzed we are right now as a nation as far as regulating cryptocurrency. But there's a lot of interesting kind of tidbits within this. So he's saying. There's a question before this. It says, have we moved from a collective analysis paralysis to a regulatory free-for-all? Now, the former CFTC chair is saying, no, I think at least the FCC, there's still a lot of analysis paralysis as to whether something is a security or not. I mean, a week doesn't go by, and I don't talk to people that have some sort of application from the FCC, whether it's for their token or whether they're a trading platform that wants to trade a particular token. Is something a security or not? And they're not getting answers right now. And I think some of this is due to the fact that we have this case, this court case, the Ripple case. It's sort of winding its way through the core infrastructure to find out whether or not they're going to continue to apply the Howey test as to whether something is a security or not, or whether there's going to be something else going forward. But there's a lot of folks that are just simply getting tired of waiting in the United States. And then what they're doing is they're going outside the United States and then trading on these platforms. U.S. investors, 1 in 5 households, are going to want to trade digital assets. But it's unknown whether U.S. investors are going to have protections from U.S. laws or not. So I think they're still suffering. Now, this Mr. Klein says the Ripple case, you're talking about the Ripple crypto, not a case rippling through. The former CFTC chair says, yes, Ripple Labs and XRP, exactly. Mr. Klein, what do you think as a regulator, et cetera, et cetera? But they're talking about paralysis right now because you've got firms trying to innovate responsibly. You have good actors that are trying to innovate responsibly in the United States that are just not getting answers. And they're moving and they're taking that innovation elsewhere. And this is a huge issue, in my opinion, because you can see how far along, especially like even in even in Europe, and in the UK, and in Singapore, and in Japan, and we know how far China is along. We know all the testing going on with the BRICS nations right now. It's a little bit concerning that there's basically no path forward for clear-cut innovation in the U.S. That makes sense. Not even any sort of like a sandbox environment that makes sense. And so you're starting to see firms and you're starting to see innovation move outside of the United States. And obviously, the biggest fear that I have is that the United States and individuals in the United States that are investing in digital assets are going to be left out, and they're not going to be protected. We're not going to have responsible innovation that is encouraged in this country. And for me, it's I think that the Industrial Revolution 4.0, Web3 is going to be kind of the biggest innovation of mankind. You could argue since the internet, but now we're dealing with value on top of that. So it's just kind of a shame. Everything's a little bit paralyzed right now, and hopefully we see something. And who knows? Like I think we've all in this, for people that have been involved with the XRP community, I think that we all understand that this is kind of a benchmark case. We even heard, Senator Brad Sherman, basically, or Congressman Sherman, who is not a fan of anything that doesn't deal in what's incentivizing him, come out and say, hey, yeah, they're going to have to kind of move forward with new regulation moving forward, but then saying that XRP is definitely a security. It's just asinine. Okay, this was gigantic as well. And then I have a little bit of speculation around Hedera Hashgraph. Blackrock, we do know that the tie-in with their Aladdin platform, which we talked about earlier this week or last week with Coinbase, etc. Now they're launching a spot Bitcoin private trust for United States clients. The world's biggest asset manager, you could argue that BlackRock pretty much runs the world, has launched a spot Bitcoin private trust for their institutional clients in the United States, according to a blog post on their website. This is that blog post. BlackRock is committed to providing clients with access to their choice of investment opportunities and has launched a spot Bitcoin private trust. The trust is available to United States institutional clients and seeks to track the performance of Bitcoin, less expenses and liabilities of the trust. Despite the steep downturn in the digital asset market, BlackRock is still seeing substantial interest from some institutional clients in how to efficiently and cost-effectively access these assets using BlackRock technology and product capabilities. Now, moving forward, I actually, until this is proven out as any sort of a partnership or whatever, that's yet to be seen. But one of my patrons reached out to me and basically said, "Hey, I think Hedera Hashgraph is doing testing with Devon Energy, or at least showcasing proof of concepts." So I'm paying attention to this, certainly. A leading independent oil and natural gas exploration and production company. Devon's operations are focused onshore in the United States. You can see their portfolio here, but what was interesting to me is looking at shareholders of Devon Energy. You've got Vanguard, you've got BlackRock essentially holding 5.63%, Fidelity, et cetera, et cetera. More news on this if we hear more come to fruition on this. This is just a little bit of speculation. I wanted to give you guys a heads up. On top of that, Google Cloud giving Hedera a shout out today. Google Cloud obviously has about 400,000 followers on Twitter. Customer Spotlight. Google Cloud provides the infrastructure and technologies Hedera needs to support the next generation of distributed ledger technology. Learn more about our work with Hedera and Google Cloud for Web3 here. You can go to this portal, see Aptos, Blockdaemon, Bullish, Dapper Labs, Hedera, Nansen, Near, Solana, TRM, build and scale faster with simple, secure tools and infrastructure for Web3, etc., etc., etc. And last but not least, it does look like the Ethereum merge to proof of stake is occurring, and it's occurring fairly soon. Supposedly, as of right now, September 15th and 16th. I saw a funny comment underneath here. I don't know if I'll be able to find it. This is threadguy.eth. I think this guy's a lot of followers, yeah. The only merge you need to worry about is back into mom's basement if proof of stake doesn't work. So it'll be interesting. I think we all have our different opinions on Ethereum's moving over to proof of stake, et cetera, et cetera. I mean, for me, I don't know, just dealing in governance that incentivizes centralization is a little bit concerning. As always, But proof of work is certainly not the path forward. I think for 99.999% of these networks, I think the only asset you'll ever see stay kind of proof of work years from now might be Bitcoin. So because every time obviously Bitcoin tries to upgrade, it forks into a newer version of itself because you don't have the full support of all the validators, and it becomes its own thing. Bitcoin Cash, Bitcoin Satoshi's Vision, et cetera, et cetera, et cetera. So I hope you guys enjoyed this video. Just paying attention right now to where we're at, not really making any definitive moves right now, but I really hope that we see something come out as far as clarity is concerned in the United States, regulatory clarity, because we all know what's happening with Web3. We all know what's going on around the world. We all know these financial systems are essentially being upgraded, and it's not just for parallel rails. I mean, there's a crossover. Even the Bank for International Settlement said essentially regulating towards interoperability because of how ingrained digital assets and the infrastructure is already within the traditional financial system. So I hope you guys enjoyed this video. I'll talk to you when I talk to you. Thanks. Bye.